Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at a MetaTrader 5 expert advisor called Range Ownership Trend Shift. This strategy is built around an original custom oscillator that measures which side of the market, buyers or sellers, actually owns the recent volatility. Over the next few minutes, we'll break down how that oscillator works, how the strategy defines a trend, how it opens and manages positions, and then we'll read through the core code together in the editor. Everything here is for education only, so let's get started. So what exactly does this expert advisor do? Range Ownership Trend Shift is a trend continuation strategy for MetaTrader 5. That means it doesn't try to pick tops and bottoms. Instead, it waits for a market that is already moving in one direction. Then it looks for a moment where the recent price action strongly confirms that same direction, and it aims to join the move. The engine at the heart of this strategy is an original oscillator the author calls range ownership. Most candle-based oscillators simply add up the body of each bar, the distance from open to close. The problem with that is a crowd of tiny, indecisive candles can outweigh the one large candle that really mattered. Range ownership asks a different question. It asks who owns the volatility. For every completed bar, it takes the full range, from the high down to the low, and credits that entire range to whichever side closed the bar. If the bar closed higher than it opened, the range goes to the buyers. If it closed lower than it opened, the range goes to the sellers. The oscillator is then the net share between the two sides, scaled between minus 100 and plus 100. A reading near plus 100 means the big, wide-range bars have belonged to buyers, which suggests real directional conviction rather than aimless drift. A reading near minus 100 means sellers have owned the movement. On top of that oscillator, the strategy layers a classic dual moving average trend filter and a full risk management framework, with a stop based on the average true range, a reward to risk target, a break-even lock, and a trailing stop. It runs on a single time frame, and the author notes it is designed with liquid instruments in mind, things like major foreign exchange pairs, metals, and indices, somewhere around the 15-minute to 1-hour range. Please remember this is educational information, not a recommendation to trade any particular market, and trading always involves the risk of loss. Let's walk through the mechanics step by step. Everything happens once per completed bar, so the strategy is patient and only acts on closed candles. First, the trend gate. The strategy calculates two exponential moving averages of the closing price, a fast one defaulting to 21 bars and a slow one defaulting to 55 bars. For an uptrend, it requires the fast average to sit above the slow average, and it also requires the slow average to be rising compared with the previous bar. For a downtrend, it wants the fast average below the slow average, with the slow average falling. If neither condition is true, the market is treated as directionless, and the strategy simply stands aside. Second, the ownership signal. Over a window of recent bars, 10 by default, the oscillator computes the net share of range owned by buyers versus sellers. The strategy then looks for a fresh cross. For a long, the oscillator must have been at or below the plus threshold, which defaults to 30, on the previous bar, and then push above it on the signal bar. That freshness rule matters, because it captures the moment ownership shifts rather than acting late while it is already elevated. Third, a body confirmation. The signal bar itself must close in the direction of the trade, bullish for a long and bearish for a short. When the uptrend, the fresh ownership cross, and a bullish close all line up, the expert advisor opens a long. The short is the exact mirror image. Now to risk. When a position opens, the stop is placed at a multiple of the average true range below the entry for a long, or above it for a short. The default is 1.2 times the ATR, which keeps the stop tight. If the resulting risk would be larger than a maximum ATR multiple, the trade is skipped entirely, so no single loss becomes outsized. The take profit sits at the reward to risk multiple, 2 times the initial risk by default. Management then runs on every tick. Once the trade is one risk multiple in profit, the stop is pulled up to break even and then trailed by an ATR multiple never loosened. Finally, there is a regime exit. If ownership flips against the open trade and the oscillator crosses back through zero, the position is closed immediately. Cutting losers early like this is the main idea behind keeping drawdown low. Let's read through the important part of the MetaTrader 5 code on screen. At the top are the inputs you can adjust in the strategy tester. OwnershipBars is the window for the oscillator, 10 bars. EnterThreshold is the plus or minus level the oscillator must cross, 30. Fast EMA period and slow EMA period define the trend filter at 21 and 55. Stop ATR multiple sets the stop distance. Max risk ATR caps how large a trade's risk may be. Reward risk sets the target as a multiple of risk, and lots is the fixed volume. Now the long block. The condition reads, trend up, and RewPrev is at or below the threshold while RewNow is above it, which is that fresh cross up, and the last close is above the last open, confirming a bullish bar. When all three are true, the entry is taken at the ask. The stop loss is the entry minus the stop multiple times the ATR, and risk is simply that distance. Provided the risk is positive and within the maximum, the take profit is set at the entry plus the reward to risk multiple times that risk, and the position is opened with trade.buy. The short block below is the exact mirror. Trend down, RewPrev at or above the negative threshold while RewNow drops below it, and a bearish close. The entry is at the bid, the stop is placed above the entry, and the take profit is placed below by the same reward to risk multiple, opened with trade.sell. Notice both sides use identical, symmetrical logic. Let's bring the whole thing to life on this illustration. On top, we have the candles with the two trend averages, the fast 21 in blue and the slow 55 in gray. In the panel below is the range ownership oscillator, with the plus 30 and minus 30 thresholds marked and a zero line in the middle. Watch how the two work together. Look at the first few candles on the left. Price is stepping gently higher, and the fast average has lifted above the slow average, with the slow average clearly sloping up. That satisfies the uptrend gate. Down in the oscillator panel, ownership is climbing but still sits below the plus 30 threshold, so nothing has happened yet. The strategy is simply watching. Now the fourth candle. It's a strong, wide-range bar that closes near its high, and that single bar hands a big chunk of range to the buyers. In the panel, the oscillator pushes up through the plus 30 line for the first time. That is the fresh ownership shift the strategy waits for. The trend is up, the cross is fresh, and the bar closed bullish, so all three conditions align and the buy entry marker appears. Notice the stop is tucked a tight average true range distance below, and the take profit is projected above at twice that risk, the reward to risk multiple of 2. Over the next two candles, price runs higher in the buyer's favor. Once the move reaches 1 risk multiple of profit, the stop is quietly lifted to break even and then trailed behind price, protecting the position. By the 7th candle, price reaches the take profit target and the long is closed for a completed move. That's the continuation idea working as designed. Now watch the character of the market change. The next candle closes lower, then another wide bar closes near its low, and ownership in the panel drops sharply, falling straight through the zero line. That zero cross is important. If we had still been long here, the regime exit would have closed us out the instant ownership flipped against the trade. Price keeps sliding, and the fast average now crosses below the slow average, with the slow average turning down. The downtrend gate is satisfied. On the 10th candle, the oscillator makes a fresh cross down through the minus 30 threshold. Sellers now clearly own the range, and that bar closes bearish. All three short conditions line up, and the sell entry marker appears. This time the stop sits a tight ATR distance above the entry, and the take profit projects lower at the same reward to risk multiple. From there, price falls through several bearish bars. The stop trails down behind price to lock in the developing move, and by the final stretch price reaches the lower take profit target and the short is closed. So in one clean sequence you've seen both sides of this strategy. A long taken on a fresh upward ownership shift inside an uptrend, and a short taken on a fresh downward ownership shift inside a downtrend, each protected by an ATR stop, a trailing lock, and a regime exit. Of course, in live markets, not every signal plays out this cleanly, and losses are a normal part of trading. And that brings us to the end of our look at range ownership trend shift. Today we unpack the original range ownership oscillator, which credits each bar's full range to the side that closed it. And we saw how the strategy combines that with a dual moving average trend filter, a fresh threshold cross, and a body confirmation to join an existing move. We also walk through its risk framework, the tight ATR stop, the reward to risk target, the break-even lock and trailing stop, and the regime exit that cuts a trade when ownership flips through zero. Remember, this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to explore next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.